Hi guys, welcome back to the channel. I'm Martin, and in today's video we'll be discussing how to invest for beginners. So let's jump right into it. First off, what happens if you don't invest? Let's say you put your money into your average savings account with an interest rate of 0 point something, let's say 0.5. The interest you earn won't even outdo inflation. What's the problem with that? Well, inflation will eat away at your money, making it worth less and less every single year. For an example, let's say you have a savings account with £10,000 in it. After 40 years, this savings account will have roughly £12,000 in it. Not bad, I made £2,000 with the 0.5% interest. Well, let's take inflation into account. With inflation at roughly 2.5% a year, that £10,000 you would have saved, in today's terms, would be worth £4,500 in 40 years. That means it's lost more than 2.5 times its value. So if you'd like to know how to beat inflation and grow your money even more, please continue watching. What is investing? Investing is the act of purchasing an asset with the intent on generating a profit or an income in the future. In other words, you're putting your money to work in the hope of making more money. Common types of investment include real estate. This is buying a property to either get rental income or selling it at a profit, and this is called capital gains. Stocks and shares. This is owning a slice of a company either for dividend income or again capital gains. Bonds. This is where you loan your money to a government or a corporation at a fixed interest rate for a fixed term, typically offering a more predictable income. Commodities. These are usually raw materials that are traded on the global markets, such as precious metals, oil, and agricultural goods. For this video, we'll be focusing on stocks, as it can be done with a lower cash and time investment. Real estate often involves a larger deposit or larger time investment. Bonds typically offer a lower interest rate, and obviously we want as much interest as possible. And commodities can be traded on the stock market, but if you trade the physical products such as precious metals, they can take up a lot of room and put your home at a higher security risk. Although with stocks you can purchase real estate and commodities, I would suggest leaving this until you're more familiar with the stock market. What is the stock market? The stock market is a collection of businesses that offer shares of their business to raise capital from the public. A share is a literal slice of a business. Let's say I had a coffee shop and I needed more money to buy a bigger coffee machine. I could either go to the bank and ask for a loan of £10,000, or I could have an initial public offering and split my business into, let's say, 10 shares. I could now sell these 10 shares for £1,000 each, making the £10,000 I needed, but now I don't owe anything to the bank. And now with my new coffee machine, my business is even more profitable. And I can split this profit with the 10 shareholders, and this is called a dividend payout. Now my business is booming and the stocks have doubled in price. Now my shareholders have the option to sell this and make £1,000 profit, and this is called capital gains. How to buy a stock? Buying stocks is fairly easy, you just need to go through a stock trading broker. In the UK, I personally use Trading 212 and Vanguard, which I'll put down in the description below. Other brokers I've heard of, in the USA we have Webull, Moomoo and M1 Finance. In Canada, I've heard that Questrade is a good broker. And for the rest of the world, I've heard Interactive Brokers and eToro can be good options. Once you've signed up to an account, making sure you're making the most of any tax efficient accounts, you will then need to add a bank account. And then most brokers after this are the same. You'll go to a search bar, type in the stock you want, and then click on it and buy it. And it's as easy as that. Now what to invest in? One of the richest men in the world, Warren Buffett, has recommended that investing in low-cost index funds tracking the S&P 500 index is the best option for most people. He believes that trying to beat the market by picking stocks is risky for normal people. Warren Buffett even made a £1 million bet that an S&P 500 index fund would beat a basket of hedge funds over a 10-year period, which he won. Individual stocks can be risky because you're putting all of your money into one company and this company could fall. Index funds tend to have lower management fees because the index fund's portfolio just duplicates its designated index, making them cheaper to own. Now what's an index fund? An index fund holds a diversified portfolio or other securities that closely mirror the holdings of the underlying index it tracks. For an example, the S&P 500 tracks 500 of the largest companies in the US. And the FTSE 100 index tracks the 100 largest companies listed on the London Stock Exchange. Investing is risky? Investing is risky for the uninformed, but education will lower that risk. Investing in index funds like the S&P 500 can lower the risk of investing because the fund is so diversified. Like during the pandemic, although some companies like Boeing dropped and stayed down, other companies like Amazon, after a short drop, increased. Year to year, the S&P 500 will have its ups and downs. But if you can stay invested, this choppiness eventually evens out, and you can expect returns of 7 to 10% based on historical prices. So the longer you're invested, the less risk there is. When should you start? The best time to invest was yesterday. The second best time to invest is today. The longer you hold a stock, the more dividends and capital growth you can achieve. And it's better to have time in the market than timing the market. But before you do invest, please watch my video on financial independence, which I'll link down in the description below. But a basic overview of this video is don't invest if you have high interest debts, or don't invest if you don't have an emergency fund. Also, don't put any money into the stock market that you might need in the next 3 to 5 years. The next 3 to 5 years might be choppy, and you could end up with less than you put in. How much do I need to get started with? The great thing about stocks is they're often the cheapest investment. My broker, Trading 212, allows you to start investing with as little as £1. And even if your broker doesn't offer this, the cheapest index funds I found were less than £10. Start with a small amount and try dollar cost averaging. This is where you drip feed a regular amount on a regular basis. Obviously, the more you put in, the better, but small amounts are great. Obviously, the sooner you get started, the sooner it becomes a habit, and the sooner you can make profit. And that is how to invest for the beginner. I hope you have taken at least one thing from this video and are going to implement it. If you have found this video helpful, I'd very much appreciate if you could give it a thumbs up. And while you're down there, please subscribe. And I'll leave other videos you may enjoy up here or down here or somewhere. Thank you for watching. Take care. Don't invest if you have